If you look at this chart over the years about the gold price, and as you are aware, the gold price per gram 22 carat in India is about, it has crossed 10,000 rupees. So, by the way, if you look at this graph from 2010 onwards to 2025, the major changes, more than double digits, happened from 2019 onwards. If you look at it, and 2020 we had a period of corona, so all the economic work became a standstill. There was a huge hit on the stock market, there was stock market fall, and that's where in 2020 you see in almost in double digits. 24% for USD, AUD is 13%, and if you look at INR, it is also 27%. The subsequent year, there was a bounce back. The economic activity started, stock market started recovering, and 22 was fine. And 22 onwards, you saw that the Ukraine-Russia war started, and then it again, the because of those challenges, economic challenges, it started again bouncing back in 23 and 24 and 25 was the worst, particularly after the US presidential election. And the reason is when the economic activity is not as per the expectation, even though stocks have not really fallen, stock market is okay, it's going up. Yes, of course, Indian stock market Sensex went up to 84 85k and then fell back to 78 79k, and it is now again in 80k or 79k. So it has not really fallen, but yes, the gold is bouncing back. If you look at 2025, it's almost like here it is 30. Never in last 10 15 years it is so very drastic. It's even with USD it is 39% and 29% and 35%. And again with INR it is more, 43%. One of the primary reason which is attributed is that there is a concept of reserve currency. The USD is the reserve currency, and the countries invest in the treasury bond, USD treasury bond. But now, because of the trade wars which is happening with the US, more and more countries, particularly the BRICS countries like China, Russia, and even for that matter Turkey, is investing on gold rather than USDs. Many companies is moving into the investing on gold. That is where you see a spike, particularly China. It is said China, even Turkey, which belongs to NATO, India is all more investing um, on gold rather than the treasury bonds. One of the primary reason is that because nowhere in earlier times you have seen so much of trade wars which US did with across countries. In fact, the trade wars has become, particularly with the US, with across countries, it has become so very common. On one day they say the tariff of it will attract a tariff for 25%, next day they say tariff of 50%. That's far as India is concerned. And as far as China, it is worse. It is, they say tariff is going to hike up one day to 140%, and the subsequent day they say we are holding passing tariff for some more time. You look at the graph over here, the yellow represents, of course, the gold. The color yellow goes well with gold. So that's where yellow is representing a gold. And this is by blue represent the country investment in US treasuries, that US treasury bonds. The foreign exchange in a country depends on both the items. One is their gold reserves, the other one is the reserve currency, which is there in USD. So if you look at it, in earlier from 1970s to 96, if you look at it, gold was it was ranging beyond 50%, and whereas the treasuries, it was around in the range of 30% and below. So 30% and below was on US treasury, and gold was more, it is more than 50%, that is country holding, each of the country holding, which means this is the time till up to 95. There were only physical. If you look at it, this was only physical export. The IT services, and if you look at it, 95, 96 is where the IT services, IT products, your Windows based system, your laptops, or your pagers, that is the first mobile device, pagers, mobile phone, all this came up. And the across the globe they had more faith on the US economy starting around 96 onwards. If you see that, it goes up, the it goes up, and gold, um, US gold holdings, and was coming down. They were investing on the treasuries because of because of US economy, because of US products, particularly in the electronic segment. It was much more attractive. Outsourcing, offshoring, the H1Bs, the visa, people migrating to US. That was the starting point, early 90s. So that's where till up to another close to about 25, 30 years, till up to 2025, the US treasuries, US economy was looking attractive. More and more investment flowed into this, or even though they were outsourced, even though they have built plants, everything in China or elsewhere, still the repatriation of profit can happen. The license fees, the royalty fees, everything goes back to US, and it found it attractive. But now in 2025, you see that the gold seems to be taking an upper edge compared to treasury bonds. And we also have the trade wars going. People seems to be, that is people in the sense, the leaders seems to be, or the investors seems to be more attracted towards gold rather than the treasury bonds. So that is one part of it. There is other part of it. We need to understand how historically, how particularly from the Great Depression days of 1929 onwards, how the gold prices have gone up. That is very important to understand. And can it be repeated by US? There are rumors, talks, discussions going on, but probably at some point of time, because of 37 trillion dollars, USD dollars of debt which US has, there could be some form of revaluation which can happen with USD, particularly with US. So to understand that, first one should understand what happened with gold during the Great Depression days of 1929. So that is a story one need to understand. Let's see what happened to that. If you look at this graph for the top 10 countries by gold reserve, this as of last year, and there is certain small changes which is happening with India, China as of now, 2025. I'm saying a few tons would have been higher this year. But the point to note here is USA. USA has about 8,133 tons, if I'm right, way beyond compared to others. Germany has approximately around 3,000 tons, so not even close to half, 4,000 tons. So the rest comes, I mean, Italy, France, Russia, China, comes at a distance third, which is around 2000 tons, and the rest, like India, is about 800 odd tons. Comparatively, in 1971, I think, if I'm right, it's around 200 tons, and now they are around 800 tons. But US, on the other hand, how did it reach about 8,133 tons? Did it require, I mean, did it acquire recent times, or it was way back? That is one story each one of us has to understand. It happened long back, 1933. And there are different, here different version of stories, because when the exchange rate was not good earlier days, US traded in gold for export, which is not really so. There are reasons about it, how they had this 8,000 odd tons. So that is what one need to understand. What happened in 1933, when there was a 1929 onwards, there was a great depression till up to 1933. And US president executive, this is very common in US. The president, I mean, invokes this executive order which said like, Let me show you that. The executive order on May 1st, 1993, all gold coin, gold bullion, gold certificate are now owned by them to Federal Reserve Bank. So anyone who is going to have gold coins, gold bullion, any kind of a gold, that needs to be provided to the US government. And it's about 20, there is a fixed rate about $20. And if you don't do that, criminal penalties for violation of executive order of, here it is mentioned, $10,000 fine and 10 years imprisonment. So everybody has to give back the gold coins, gold billions, whatever they have, to the government and exchange uh, uh, um, to their US dollars. So if you look at it, it was about, initially they said for an ounce they gave $20. So the reason is there'll be more, instead of gold, I mean, a lot more currency circulating in the economy. The stated reason for the order was that hard times caused hoarding of gold and stealing economic growth and worsening depression in much of the US. So that is where they made this order, and so that more currency is there into the economy, and that's where they built that 8,000 tons of gold over the period of time. And in 1934, they depreciated it with the USD. An ounce initially in 1933 order, it was $20, and then they made it to $35 in 34. And that was in place till up to, if I'm right, till up to 1970s. You can't really hold gold. Only in 1970, this was, I mean, they can own gold. I think President Nixon changed it. So this order, so due to this, US was able to accumulate huge gold reserve over the period of time till up to 1970s. So this is the reason why they currently have so much of gold. I don't think any other government did that except for US. So this was revoked only in 1975, if I'm right. Till the time it was there, they have to exchange the gold coin, and that's where they built so much of reserve, 8,000 odd, 8,133 tons. So if you do a search, it's almost like in 1975 itself they reached this 8,000 tons. Whereas if you check anything for the rest of the countries, what is present now might not be the same in 1970s or 75s. India, I think, hardly had about um, few hundred tons, maybe around 200 tons of gold that time, and now they have reached about 800 tons. But still, it's just one tenth. So gold price increases could be beneficial for US as well, and some point of time they could take up the revaluation or devaluation of USD as well, because the depth is so very high as far as US is concerned. So considering the huge depth US has, that is 35 trillion national debt, and towards what is US is trying to have the trade wars, tariffs and all, so that the government gets more money. And that is where, I mean, recent times, Russia is warning something similar. It might not be the same approach what they did with gold domestically in 1933. They could something, you got to devaluate the USD so that it becomes much more attractive in the for investment. So now even the USD is going up. It's about, in fact, in for INR it's about 85. And yeah, if you look at 1930s and 40s and 50s, USD was almost equivalent into, for 3 INR, 1 USD was 3 INR, but now it's 85. And if you look at the South Asian countries, it is even worse. In fact, for Sri Lanka, it's about 300 odd rupees, 300 odd Sri Lankan rupees, and same case with the Pakistan rupees as well. It's 200 odd or around 300 odd. So something similar, looking at the way the not just the US alone. In fact, the rest of the countries also, like looking at the treasury bonds, they have, considering the trade wars which is happening, and there are acquisitions. US accusing other countries for their trade deficit. Looking at that, I mean, the countries are a little bit scary. What will happen if the treasury, something happens to US treasury bonds? So that's where, like, more and more countries feels that or attracted towards the gold. That's where the investment goes, because the retail small investors might do in few grams, 1 gram, 2 gram, or once average. But whereas the country can invest in a chunk, maybe 1 kg, 2 kg, or in multiple kgs as gold biscuits. And that's where the country seems to be investing more on the gold, and that's where the prices in the last 1 year has gone more than, if you look at the earlier chart, it is, there is a huge jump of 30, 40, 50%. The prices of gold has been going up. So let's see how this goes. But again, if you look at the history, because the economy is not doing well, we see a spike in the gold rate, prices going up. And added to this, if you look at the history, yes, earlier US had done that. They had exchanged US dollars domestically, US dollars to kind of a bartering. They have did exchange US dollars to gold, and that's where they have built a pile of um, gold reserves. It's 8,000 tons odd. The rest of the country is nowhere near it. But still, it's early days. Let's see how it goes. But yes, the gold prices are going up, no doubt on that. So we will see how it goes. So I hope you found this useful, as that gives you an answer as why the gold prices are going up in the market. So thank you, and do subscribe to my channel. Thanks and cheers.